A system will reinforce a system. So it's a way bigger consequence. And it's easy to look at people in the system instead of a system naturally reinforcing a system. I know and why that's important is it is a feature of this system. Inflation is theft. It's a hidden theft. And that theft enriches some people at the expense of other people. Inflation, as you said on your last segment, inflation, the other side of the coin is wage and savings deflation. So the wages you're getting are going down in real terms. And so when you have a small number of people at the top and more people at the bottom, and you drive inflation, you're hurting the people at the bottom more and more and more, and you're enriching the people at the top. What the people at the top don't see, though, as well, is the societal collapse of that creates kind of the next step of that in us versus them, and revolution comes. So if you look at Germany in the 30s, same thing was happening, and who do you think the wealthy were? And what happens next is a revolutionary leader comes in and changes the narrative to say, we're going to take back those assets. And so in that environment, and what ends up happening with the wealthy in that environment too, is they think they're safe because their assets are in hard assets like real estate and everything else. But those real estates are in the country that is creating that inflation. And because of what happens next, those assets are often seized or taken back. And this is where I think we'll get to Bitcoin, and I think that is the safest asset, and it's an asymmetric bet. It's the safest asset. It's the king of all assets in this time. But more importantly than that, it's a vote of what you want the future to look like. I think you either believe that it's okay for a small number of people to control all others, and they can print money all they want, and everybody else is a slave to that system, or it's not. And if you believe that it is okay for that to happen, who should those people be? Because throughout time, throughout history, you see people changing their minds. Ego, arrogance. Humans change their minds, and I want to trust monetary policy to people who change their minds and create that. And if you kind of play that forward, where things are moving with AI and robotics, I don't want to concentrate that power in a small number of people to make decisions over everybody else. I would rather have that decentralized. So prices, and what would happen on Bitcoin Standard is prices would constantly come down. So it would enable the free market. So the abundance gained from technology would be more broadly distributed. Yes, it is the primary asset I would own in today's market because of the safety. You can move it anywhere. And you're not, if you remember 12 words, you can get on a plane and go anywhere you want. And there's going to be countries competing for capital and entrepreneurs the same way they do now on a fiat system. They're going to be competing on a Bitcoin system. So that provides a relative safety for family, wealth gain, everything else. But more importantly, because the system can't change itself, you need a transition mechanism to allow you to get to the other side from an inflationary monetary policy, which might have worked for a long time, to one that allows deflation, which must work, which must be enabled with where technology is going.
When you think about Bitcoin specifically, why do you say that it's superior to all of the other assets? Is it something to do with the structure of it? Is the sovereignty? Is it everything in totality? Like how do you think through the various options that someone has? Maybe equities, real estate, other commodities, currencies, and Bitcoin.
Well, let's look at over the last 100 years, real estate would have been the top asset class, and it's a top asset class because you can lever it. And you can pay back the debt in money that's being devalued over time. And so you take on debt, then use the system to be able to pay back debt in cheaper dollars tomorrow, and your asset price rises. Now, and then if you own 10 houses and your neighbor owns one, you're richer than your neighbor, because now you can rent those up. Rents go up, and again, along with inflation as well. If you own 100 houses, you're wealthier. If you're Blackstone and competing against private buyers in the real estate market, you own more of the wealth. So that system, and then if you don't own it, houses, obviously you're a slave to that system, working harder and harder as your rent, food, everything else is going up. So you can see the example I'm making through real estate alone. That's been the top performing asset class over the last, call it 100 years. Next would be equities. But all of those assets are in the existing system and being priced in devaluing dollars, and that's one risk, those dollars being devalued. And if you think that that's the only risk, then continue to own predominantly real estate, equities, and everything else, because you'll have some sort of safety in that. But that's not the primary risk. That's not the only risk. The other risk is the system collapse. And Bitcoin protects against both of those risks. And today it would be hard to see because you don't have in Bitcoin. There's two network effects. One of the store of value that is growing, the primary kind of layer one, which would be like investing in the internet itself, TCP/IP. And then layer two on Lightning and such, and it would pump. You know a lot about this, but today, if you said today where we are, people say, well, I can't use Bitcoin as a currency in most places. It's just hard to use as a currency. But remember, what we do, what all businesses do, we project our current reality forward, thinking we're projecting the future instead of projecting the trend of technology forward and what that will mean. And what that means and what's happening on layer two and Bitcoin is you have two network effects feeding back against each other. And I think it will highly likely to become a currency that you can use and the best store of value. So in first world countries, we don't see that because we've had a system that it operates pretty fairly for a lot of years. But if you're in a third world country like El Salvador and you don't, even the Bitcoin is upwardly volatile, it is less risk to use that as a currency than the existing currency. And so what you see is lots of other countries starting to use this as a medium of exchange as well.